Hello and good evening. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Tuesday, the 10th of August. Looking at Bitcoin versus the US dollar, a little bit of softness today, and we've seen that strength spread out to different assets like Cardano is working versus the US dollar and is trying to play catch up. So most of the assets that are positive today are trying to play the catch up game, as we've really had, Ethereum and Bitcoin have taken the baton out of the gate, but we're also seeing some strong coins, which we'll get into in a minute. Now, again, I think it's important for us to remain looking at the big picture here, especially with Bitcoin. We'll go out to just a price chart. We don't really need anything else at this point because the energies look pretty good. Let's go out to a larger time frame. And what's important now is that with the price beginning the reversal process on the weekly chart, remember, this is just the reversal process is beginning here. We had a confirmed downtrend in play, right? And that reversed, and this is the beginning of a reversal. So at some point, we're going to have some type of pullback along the way. Now, it could be sideways, it could be straight back, it could be somewhere in between. It's likely going to be some combination of those. So where that pullback goes to will tell us whether or not this is just forming a lower high in the monthly chart. So this is the concern right now. Not really a concern, but just something to remain balanced in our analysis here. If this is the beginning of a downtrend on the monthly chart, what will happen is this will eventually die like this. So this is possible. And so I want to make sure that we account for all different contingencies here to make sure that we're looking at the right thing. And so the best way to do this is with fib retracements. So I got some questions last night in email about, hey, how do you set up these fib retracements? Let's look in the weekly chart, because I think this weekly chart gives us the best amount of detail. We can expand this out just a little bit. And we have a nice weekly swing, which starts from somewhere around 29,000 and change, so far up to about 46,800. So what we're going to do is on TradingView, and I'm assuming that most of you are using TradingView or something similar to that. All of these are kind of the same. We're going to select the Gann and Fibonacci tools that are on the left-hand sidebar, and then we're going to look for retracements. That's what we're going to do today. Now, tomorrow, if I do remember, I'm going to look for fib extensions, which is kind of the next line of analysis here that we don't talk about much. Now, everybody's different. I tend to use the entire price range of the weekly swing, which means that I'm using everything from the tip of this, the bottom shadow of this candle, all the way to the top shadow of this candle. So the entire price range I use. Some people just use the real bodies for the candlesticks, so the closing, so thus far the closing values, which I suppose the closing value is technically more important, but usually only in retrospect. Right now, I care about the entire swing. So once again, let's start this. We're going to go to the fib retracement. And the first thing I want to do is after I select that tool, I'm going to put my crosshair, and I really care mostly about the horizontal price level here. And I'm going to click it once. And then what I'm going to do is expand this range up to, and you'll notice where my cursor is not the top values because those are extensions, but the third one down, which is that gray number there, which is, I'm placing it about 46,818. And that represents the current swing. Now let's zoom in on this just a little bit more. Right, so let's really expand this and so we can see what's going on here. So the current swing from 0 to 100 is here up to here. That's 0 to 100, right? That's the entire swing. And what we're looking at is these lines are automatically percentages of them. I've got them set for 23.6. That's what it's pulled back to so far. Here's 38.2, 50%. And then 61.8, and I really don't care about anything else besides those. Anything below 61.8 And what we're seeing is the price tends to, once it sets a high, it will come down and bounce off of 23.6 or 38.2 or 50%, or even as deep as 61.8. Now, if it goes below 61.8, typically what it's going to do is to fill in the entire triangle. This is what I mean by filling in the entire triangle. It goes and sets a high and then just pukes to the downside. So really, this is the level that we care about the most, which is right around 36,000 right now. Now, to set these levels, what I'm going to do is place my cursor on the fib area here and just right click and then hit settings down at the bottom. And what you can see is that you can select which ones of these. There's all kinds of different fib levels, and there's people that know probably a lot more than I do about these in terms of just the math theory behind them. I don't really care. I care about 38.2. I care about 50%. I care about 61.8. Occasionally we'll see something come down to 23.6 and bounce, and that means it's a very shallow bounce. But 38.2, 50%, and 61.8 are the three most important fibs. 50% technically is not a fib level, but I include it anyway because we see so many 50% retracements. So again, looking at this, the price is either going to pull back some level. A 23.6% retracement means it's pulling back 23.6% of this entire swing. Or this one is 38.2% of the entire swing. And these are based on Fibonacci ratios, Fibonacci numbers. You can go Google it and go find out more about this Fibonacci guy. But that's how we use fib retracements. Now, what I also do is rarely do I just use fib retracements out in the open. What I'm always looking for is whether or not it lines up with something else. I'm looking for confluence. I'm looking for it lining up with a moving average or an important support line. In this case, you can see that the swing test here is about 41,000. Remember that old swing test, that 41,000 or 42,000 on this one over here? That was a really big, important number. We can also use things like volume profile to understand where the high volume peaks are, high volume nodes. And so what I'm looking for is the fib retracement to line up with one of these levels like that. And then it becomes more powerful when it does that. So rarely do you just want to use fibs alone. Actually, I will go back on that and say this retracement here. So let's get rid of this one. Let's remove that. And let's take this line. And we did this a few weeks ago, in case you've forgotten, right? So we took this daily swing from bottom to top, and look where the price came down to. It came down to exactly the 38.2% retracement. That is the first major fib, and it actually even retested that intraday 2 days after that. Intraday, and then boom, it's gone. So rarely do I see just a fib retracement by itself become support. But this is what's going to happen in stronger markets. Is it's going to take very little to get the price to reverse. Usually it takes, an active Congress to get something to reverse, and it has to be bolstered by several levels of confluence. Okay, so hopefully that makes more sense about fibs. The one thing I do want to leave you with here today, the rock star of today, is Axie Infinity. We've been talking about this one literally for weeks. And this one is set up, and what I really like about this is the huge amount of energy that this had on the daily chart. Now, I did qualify this recently. I said it really needs to walk sideways because the weekly chart is in exhaustion. Guess what? It doesn't care. This is what I always say about markets is, look, we do the statistical analysis based on what we see in energy and what we see in support and confluence and everything like that. But when there's a supply-demand imbalance, that's the only thing that counts. And right now, demand is much higher than supply. That's the only thing that counts. And we're seeing enough volume to get this thing to break from here. Not huge volume. We don't know how much China has affected things, but right now this is enough volume to get it to break. That is a beautiful technical pattern. And as we talked about, a break above 48 is a buy signal. And there it goes. Guys, that's it for today's report. Thanks for listening. We'll see you tomorrow.